morning, everybody, and welcome to the Fred Report Technical Market Call for March 29th, 2012. 1 day left before the end of the month and the end of the quarter. We're seeing about what we thought we would see in the market. We actually thought this week was going to be up and next week was going to be down, but we are seeing a little bit of a down week here. The most important thing is we've hit our targets on the SPY in the 140 to 143 area. Certainly some correction here would be positive and would be expected. We don't think it's going much below 132 on the spider. We would buy that correction. We note that should we get 132 on the spider, we should see small and mid-cap stocks come down a little bit more percentage-wise. We would use any drop here as an opportunity to start to add those stocks. The really interesting thing about the market is the last time we were up here, monthly indicators got overbought, and percent bears on Investors Intelligence on a moving average basis got down to 19%. I'm going to do the monthly this weekend. I think that indicator will be in the 25, 26 area. I can't really know until Friday where it's going to be. But the point is, it's actually still in the buy zone and not in the sell zone below 70. So, we don't have a sell pattern. Yes, we're overbought, but there is no sell pattern. We have to remain a little bit positive on the market, even if we're overbought short term, because of that. So, basically pretty happy with the way things are, looking for some correction, looking to buy. We've had a lot of questions on energy. We went to an equal weight on energy in the sector review, a couple of weeks ago. It's come down a little bit more than I think it should come down. The interesting thing is the commodity itself is still holding the breakout, barely. DBO has got 30 support. Below 30 on DBO would target 28.50 to 28. Below 40 closing on USO, and we're below it, would tend to target the 37 to 38 area. And that could very easily happen. Oil normally declines seasonally into May. It sure looked like that wasn't going to happen initially, but it looks like it is now. One of the questions we're getting is obviously, when do we add oil stocks, add to our holdings in oil stocks? And the answer to that question for me is, right now at least, is not until the first week of May. Let's let these things fall. Let's see where they can end up, and let's add to them. I would keep an equal weighting in oil. The accumulation models on all of the commodities, oil included, still look really good, but that means also people are buying them on the way down. So I would expect to see energy actually fall, and fall quite, perhaps precipitously, i.e. XLE back into the 66, 67 area from here. OIH, the oil stock index, 38 to 37, no problem. And that's still a ways from here. So let's see how that goes. Obviously, if the market can correct a little bit, these should lead the way down. That's why we featured oil and stuff in the midweek. And so I'd just be careful here. I'd hold what I had. I'd expect it to go down, and let's look to add to energy the first week in May. One other thing on the stock market, which I've noted here, we are seeing the classic concern that says a short-term correction is likely, i.e. the market has gone nowhere and percent bears has gone from roughly 27 to roughly 22. A nice sharp drop in the market should correct that, especially if we can see some bad news. For those of you who've been watching TLT, we've talked about bonds as being a bobbing cork short. TLT has just filled the big gap around 114 area. That can rally to 115 to 117 and hit the downtrend line and start down easily. I would expect that to happen, and frankly, one way to play the stock indexes might very well be to wait and see if we can get TLT to 115, 116. We think we will have a bearish move on bonds and a bullish move on stocks after that occurs, or while this is occurring. In other words, this is going to be hard to time. I'd be putting in orders below the stock market, looking for, see if we can get some prices, and if we don't get them, we'll do something else. But let's give all this stuff a chance to correct a little bit the first couple of weeks of April, maybe down even into May, sideways to down, and see what happens. And again, remember that the Russell, for example, IWM could really get whacked here if we get a 5 to 6% correction on the S&P. That could be a 10 to 11% correction on the Russell. It goes up more, it goes down more. Looking at daily stochastics, they started down, they have little sell patterns on them, but they're still pretty elevated. Let's hope we can get those stochastics down and then set up for a summer rally. We've had a couple of questions on gold, and gold has been fascinating and difficult to play. And the real question here is, are we building a giant head and shoulders top on the daily gold chart, which would be confirmed by a break below 155 or so, or is this a giant head and shoulders bottom on the weekly gold chart, which would be confirmed by a break above 175? Our tendency is to think that we are building the shoulder on the weekly chart. The daily chart pattern is not a real good head and shoulders. And I would expect gold also to start to do a little bit better, but possibly some more choppy and sideways movement over the next few weeks. When I look at DBC, the main commodity index, it's got a fair amount of support in the 28 area. It's coming down. And a break above 30 on DBC at any time would be very positive. Again, I'd let this stuff come down. I'd let this stuff come to me. I wouldn't chase it. I think we're going to have a chance to buy stuff lower. If I'm wrong, and the market starts to get better, I think we'll know. Looking at agriculturals, DBA is actually coming down. It's a little bit late seasonally to come down, but it could continue down on DBA if 28 stays broken short term, and we're at 27.90 on that. A test of 27 cannot be ruled out. That would actually be positive. And we note that PAGG, the agricultural portfolio of stocks, that stochastic is also coming down. This looks a lot better than DBA. Frankly, I would hold what I had here, and let's see if we can get that back down to 28.50 and add to it. I don't have a huge hurry to add to much of anything in that area right now, but I think it's going to be good in a summer rally.